All right, welcome to today's uh, market outlook. So we're going to looking at the macro contest of this week, and this is probably brought to you by MacroLab FS, and the person behind the screen is another person that the lead analyst, George. I'm going to break down what we have for the week, what we're looking at from the macro perspective. So I hope this video brings value for to anyone who's going to watch this. Please ensure you like, ensure you comment, ensure you subscribe, ensure you turn on your notification button to always get this every week. So we're going to be doing this every week. Either it comes in on Sunday afternoon or it comes in within Monday, right? So one of those days is going to drop depending the condition of the week. So let's dive in. Let's look at some things. So this week we have three major things. We're going to look at the regime. We're going to look at the primary driver. We're going to look at the key risk. All right. And this report is valid from 27th April to 1st May. This is our weekly outlook. So what is in for the week from regime perspective? We have our policy convergence with inflation overhang. So what does that mean really? All right. What does that mean? We have our policy convergence. So what it means that central banks are going to meet this week. We have the ECB, European Central Bank. We have the Federal Reserve. We have the Bank of England. All of them are going to meet this week, starting from the Fed. Fed is going to meet on Wednesday. ECB is going to meet on Thursday. Bank of England is going to meet, on Thursday. We'll have other regime defining events like the US GDP Q1 first quarter. We have the PCE March. We have the inflation data flash for April for Euro area. We have GDP for Euro area Q1 first quarter as well. So it's a dense week for very dense, and very dense. Okay, but we're really prepared for it. I'm going to see what it does. We have the primary driver. Our primary driver this week is central bank guidance, and GDP and PC validation. That's what we have this week as our primary driver. So when we talk about primary driver is that thing we know that is going to drive the market. Okay. And our key risk means what could change our outlook. Like I've always said, our key risk is what could change our outlook. So market misprice for inflation persistence. So if market is not really seeing inflation as a thing, that means for the week, the market has been mispricing inflation, all right, depending on how the central banks are looking at this, especially for Fed. So that's what it is. So let's look at what we have for as the week in contest. Let's look at what we have as a week in contest. So the week in contest, we have the central bank outlook, right? We have the central bank outlook, and it's really in line with what we're looking at from the monthly perspective, from monthly outlook. This month is all about inflation validation. Is the market still at inflation risk, or is in disinflation relief? Really, that's what we have been looking at throughout this week, and the market has been pricing, within that regime. Okay, at some point within the week, within the month, the market price, it's inflation relief. At some point within the month, the market price inflation risk is persistence is back to the market. So the market is now battling. As is the market going to see constant inflation alongside with growth and all of that? So this is really what the market has to answer. Of course, the central bank has to answer this question during their conference or commentary. Okay, so let's look at what we're looking at, where the market stand entering this week. So the market inflation is still above targets across US, UK, and EU. It's still above their central bank targets. Growth is uncertain but not collapsing. The US 2-year yield is still above, it's still approximately 3.8%. showing that, indicating that the Fed is not willing to cut at the moment. Fed is expected to hold, but not to ease. So this is already priced in, all right? This is already priced in data, okay? This is already priced in data. So this is where the market stands at the moment. So why this week is different? This week is not a positioning week. It's a decision week. Markets must now answer two things. The central bank validate inflation persistence or not? Okay, the answer determines the macro regime entering May. All right, that answer determines, especially for growth too. We should not overlook growth. Okay, the answer they gives us from inflation perspective and growth perspective is going to affect the macro regime, entering May, and that will be on period really. Okay, that will be on period. So we have um, our regime calendar, which is very important. One of the events we have that could drive or change the regime. No, we don't look at just calendar. We look at regime defining calendar, and we also state why it matters. Why it matters. Why it matters for us is because we don't just take headline and run with headline. Headline is not data. Okay, so you must be able to take those data and amplify it into the current regime. That is when it makes sense. And that is why MacroLab FS is here to always, put out the right context for all of our viewers, all of our users, and those who believe in what we are doing. So the first thing we have on our table is the FOMC rate decision on Wednesday. And of course, we expect the market not to react to anything because on this announcement, because the data is already priced in and Fed is not willing to cut rate, at the moment. So why it matters this week is hold is fully priced, but the statement on inflation and dot plus signals are the regime defining variables. Any hawkish shift is USD bullish, right? So we are going to pay attention to what Powell is going to say about the inflation, about growth, their dot outlook. Does it change what they give, what they said previously, and all of that? That's going to determine how the market is going to, take on that information and begin to price. Then we'll have the press conference. The press conference is for me, the press conference is the most important thing. So, yeah, on Wednesday, because markets want to see Powell's tune. Powell's tune will determine if the market will take on hawkish perspective or dovish perspective, or just stay, neutral and still stay largely on data. Okay, so are we going to still stay on data dependent, or are we going to stay on, a forward-looking perspective, as usual? We'll have the Eurozone CPI. The Eurozone CPI is key, very key to what ECB statement is going to look like on Thursday. This data is coming on Thursday. We also have the GDP coming on Thursday as well. We have the ECB coming on Thursday as well. Same Thursday. It's not captured here, but please take a note that it's same on Thursday. We have the Bank of England. For Bank of England, the Bank of England constrained between growth and inflation, and want to look at their voting scenarios, okay, and the voting scenarios and the forward guidance to determine how pound is going to react entering May. Okay, then we'll have the US GDP Q1 advance. We'll have the core PCE. Very important data on Thursday. So I believe the US core PCE and GDP advance is going to validate anything we're going to do in the US FOMC rate decision and FOMC press conference, because the US GDP Q1 advance and US core PCE month on month, all right, is a regime defining data, all right, and there are two key data the markets want to see. Yeah, the key main data the market want to see to validate whatever the FOMC has said, or yes, I've said, or is it that it's converge or it diverge? Okay, so we're in for all of those things. We're in for all of those things. We'll see how that goes. See how that goes. Then let's get into our policy decision matrix. Okay, this is the primary tool this week, right? This is the primary tool this week. Like I said, our matrix decision, our scenario matrix is where you want to pay attention, because that's where we begin to filter what to expect and how to position ourselves, for the week. For the week, we have three scenarios. We have three scenarios. One is the dovish validation. We have the neutral hold. We have the dovish surprise. These are three key data, three scenarios we're going to use to stay on this market. And what are the things that are going to, what are the data that are going to feed these three scenarios? Is the growth and inflation data, okay? Then perhaps the Fed soon, right? So, but the two key variables that's going to feed on our scenarios is the growth and inflation data. So first scenario is hawkish validation. Why do we expect, what should we expect based on our expectation that will make validation and a hawkish scenario as we enter into Wednesday and Thursday is one, if Jeremy Powell confirms that growth is not at risk, however, inflation is still elevated, meaning it's still above targets, then market will capitalize that Fed is still, firm, and Euro USD is going to be bearish, Pound US is going to be bearish, and this probability scenario probability is on 40%. It's on 40%. In fact, this week we have 40, we have 40, we have 40, we have 20. Okay, yeah, that's what we have this week. 40, 40, 20, based on a scenario analysis. So the base case for us this week is a neutral hold. And why we are expecting a neutral hold is because would Fed agree that growth is still mixed, that we need more validation? We need to see more data to validate that if growth is deteriorating or it is still, on a stable state. That's on Thursday. Growth data will answer that. And if Fed said inflation is still elevated, which of course it is, then it's balanced. Then we expect a flat and a ranging market, which is our base case, and it's 40% that this will happen. Then a dovish surprise, which is 20%. Yes, what could give a dovish surprise? Inflation cooling. If PC should cool on Thursday, if PC should surprise us on Thursday and it cools, wow, that would be a surprise against whatever Fed is going to say or FOMC meeting is going to say on Wednesday. Then if we have a surprise data on GDP Q1 first quarter being weak, then that will be a surprise, as well for everyone, and that could mean something for us. Okay, then we'll have a soft Fed soon. Then Euro US is going to be bullish, and Pound USD is going to be bullish as well. All right, let's look at our focus points too. Now, how to interpret the policy decision? We have three: hawkish validation, neutral hold, dovish surprise. If Fed acknowledges inflation risks in statements, GDP stable at 1.5%, it removes growth. So if we have our Q1 first quarter GDP at 1.5% and above, it removes growth concern. Then core PCE is sticky at 0.3%, confirms persistence. Then we expect yield to break out, the 2-year yield to break out. The USD strengthens structurally, and all of that. So let me use my pen so that it could be a little bit clearer. So if we see Fed at 0.3, if we see PC at 0.3 month on month core, then we'll say US is going to be strength. It's going to gain strength during that time. Although we'll have to see ECB and Bank of England as the case may be. But at the moment, the Fed overrules most things. Then we'll have a neutral hold. Then we'll see Fed stays cautious with data-dependent language. So this will be a neutral hold. Like I said in subsequent slides to this, if Fed stays neutral, that means it's going to be data dependent. That means the Thursday and Friday data is going to be key, very key to what we're going to expect and how we're going to do that. The Fed is going to be dependent on data, and that will be data dependent language. Data is mixed, no strong conviction. So markets will likely rely on Thursday data. Then if yield stays within 3.65 or 3.8, both pairs range bound, markets wait for Thursday data to reset direction. So these are our base case, really. This is our base case. We expect Fed to be neutral and wait for data to stay the pin down, which is on Thursday. And if we get that data, then we expect markets to react based on that data going forward. And if we have a dovish surprise, which is very slim, we're seeing Powell softening soon on inflation risk. Core PCE prints very below, then growth weakens below, then we will see USD weaken structurally. And this is what we mean by policy decision and how we want to see things, happen. Then what we watch on the yield case, watch on the yield market, okay? Then how do we look at the yield? Because the yield is what builds on interest rate expectation. All right, so the yield is one of the focus point 3, which is one of the important guide we also want to look at. And what does it mean for the market? The yield sensitivity guide, what does it mean for the market? If 2-year yield is above 3.8%, it simply means that inflation regime is confirmed. And how market is going to interpret this is if Fed has validated inflation persistence, market is pricing low 2026 cut, restrictive policy, hawkish validation scenario fully activated, then we expect Euro USD and Pound USD, to price lower, as the case may be. The neutral regime, if we see 2-year yield around 3.65 to 3.8 is around this range, then it will be a neutral regime. Fed delivered a hold with no clear signal. Data is missed. Market, Then market will now wait on GDP and PCE data to reset the neutral hold scenario. But at the moment, if that is the case, the market will range entering Thursday. So if market should break below 3.6, if you should price below 3.6%, that will be a dovish move. That will be a bullish move for Euro USD. Then Powell or data surprise to be dovish side and all of that. Euro USD to be bullish and Pound USD to be bullish. USD weakens the convention, and all of that. So that's what I expect from our yield sensitivity guide, and that could make sense for all of us, really. That could make sense for all of us. Then the pair outlook we have for Euro USD. Euro USD, we expect neutral. We're not in any direction at the moment. We want to see the data coming so we can properly take position without guessing. So we're on neutral level, neutral state at the moment. No bias at the moment. We're not taking any bias at the moment until we have things to see. They will have the FOMC, the event risk. We have the FOMC Wednesday. We have the GDP and PCE Thursday. We have the ECB Thursday. These are the event risks that will, create that volatility and bring in that inefficient state, in the market. These are our key level in the market, as the case may be. What could change the bias of the week? We already highlighted that on our previous slide. You could just check out on that. What we have, our macro setup, US is supported by inflation persistence and the expectation that the Fed holds higher for longer. All right. Then euro is constrained on both sides, weak Eurozone growth. We have Fed, ECB cannot be too aggressive on hiking rate because of growth not really accelerating as expected. Okay, so it limits Euro USD buy, at the moment. That's the case for that. Okay, so we have pound, the same thing. FOMC on Wednesday, BOE on Thursday, GDP and PCE on Thursday will remain neutral. This is the key level we are holding. We're keeping very close to the key level. And that's the case. What could change the bias? And we move to the risk to the outlook. Like I said, our pair to outlook is not the most important thing on our report. Most people want to say, oh, how are we going to buy? We're going to sell. Our pair and outlook is not really the most important aspect of our report. What's the most important aspect of our report is one, our scenario matrix, sorry. Let me bring that up. Okay. Our scenario matrix, our scenario analysis is most important. Is the most important aspect because that's where guides us on how to take position as the week opens. Okay, as the week opens, it's very important. Then the next important aspect is the risk to the outlook. All right, the risk to the outlook is the second most important slide on our analysis. And what does it really mean? The risk to the outlook is what could change the bias entirely. What are the data? What are the environments? And stuff like that that could change, the environment, and that gives us the risk to the outlook. So let's look at it together. The risk to the outlook and what we think, that could be the risk. The primary risk is policy surprise. Fed turns more hawkish than expected. Then if the Fed delivers a hawkish surprise on Wednesday, yield will break higher quickly and USD strengthen accelerates across all pairs. The specific risk is that Powell signals possibility of additional rate hike if inflation does not progress toward target. That language would push 3-year yield above 3.85% and invalidate the neutral bias. So that could just be primarily the risk to our outlook is centered on Powell's tone and primarily on GDP. Okay, then the secondary risk is data divergence. The data divergence is very, very key. Okay, which are secondary risk is strong GDP plus sticky PCE on Thursday will create that divergence for us, which is if GDP beats 1.5% or something close, then core PCE simultaneously prints at 0.4%. The market receives simultaneous signals of growth resilience and inflation stickiness. That combination is the most supportive data environment for a hawkish Fed repricing. If one of the FOMC delivers a neutral hold, in that scenario, the yield reaccelerates and all of that, blah, blah, blah. Okay. So this is what we're looking, this is what we have for everybody this week. And this is what we're looking at in terms of on our playbook and how we want to position ourselves this week. And I hope you find this video useful in making decisions, right? If you want to get this, you can scan the QR code. You can scan this QR code, or you could copy this, all right? Or you could send me an email. I think I'll also drop the link to this on the comment or something somewhere, right? You could find it, or you could join our Telegram channel where you can get market updates, and all of that. I hope this video makes sense to you, and I wish to see your comments. I wish to see your follow. Please subscribe so you can get value as this. We look forward to bring more valuable content, especially for retail traders who are at disadvantage of market dynamics and what it means for everybody. All right. So take care and bye.